Good day, everyone. Good day. Can you hear me? Can you hear me? I welcome you to today's live stream. Can you hear me? If you can hear me, please drop a comment. If you can hear me, you can also see my screen. Please drop a comment. You're welcome. You're welcome to today's live stream. You're welcome. You're welcome. You're welcome. Confirm you can hear me. You can start dropping your questions. If there's any pair you want me to analyze, please let me know in the comment section. Have any pair you're considering trading today and you want me to analyze that pair, please drop it in the comment section. And if you have any Forex related question, drop it in the comment section. You're welcome. So we'll start by looking at the calendar for today. Today is 12th August and CPI data will be released by 1:30 p.m. Nigerian time. Okay. Australian dollar released its cash rate data around 5:30 a.m. Nigerian time, and you can see that the forecast and the actual is the same thing. The actual value and the forecast value is the same. So for me, that's neutral for Australian dollar. It's neither bullish nor bearish since the forecast is the same as the actual. Okay, so it might not have much impact on Australian dollar pairs. Okay, so and the next news we're waiting for is core CPI, which is a major news from the United States. So if you're considering trading USD pairs, I would advise you wait for this news to be released before you execute your setup. Okay, personally, I'm not taking trades on USD pairs until the CPI data is released. That's what I would advise that you do between now and New York session. Before this news will be released, most times the price will be choppy. Price action will be choppy, so you don't want to execute trade when there is no clear direction. Okay, so that's it for today's fundamentals. So let's go to the chart. If you have any question, please let me know. Let me know if you have any question. Let me know. So let's go straight to the chart. Okay, so we'll start by analyzing dollar index and Japanese yen. Straight to the chart. So as you can see, since yesterday, you can see that dollar has been ranging. You can see dollar has been ranging since yesterday, and that's because of CPI data that will be released later today. So on dollar index, there is no clear direction. Though my weekly bias on the dollar index still remains bullish. My weekly bias for dollar index is bullish. So I would expect that, as you can see, a fair value gap has been created at this point. I would love to see price pull back to fill this fair value gap. Okay, this is where I will be considering going bullish on dollar index. I'd love to see price pull back to fill this fair value gap. Okay. As far as I'm concerned, dollar index on a 1 hour time frame is at a premium area, and we don't buy at premium area, we only buy at discount area. So I'd love to see price retrace back to this discount area. This is where I'm looking for my buys on the dollar. Okay, you apply your Fibonacci from this swing low to this swing high. Okay, if you apply your Fibonacci from this swing low to this swing high, you want to see price pull back to a discount area before taking a trade on dollar. I hope that is clear. So that's my take for the dollar for today. I am still bullish on the dollar. I'm still bullish on the dollar. I hope that is clear. If you have any question on this, let me know in the comment section. If you have any question, move on to the next pair. Now, the next instrument I want us to look at is the yen basket. Yen basket, we need to know the strength of the yen before taking a trade on JPY pairs. If yen basket is bullish, it means the yen, Japanese yen, is strong, will be bullish. It means Japanese yen is gaining value. And if the yen basket is bearish, it simply means the yen is going to lose value. Okay, so let's see the basket yen basket chart. At the premium area, we don't buy at premium area, we only buy at discount area. Okay, so as you can see here, let's start with the daily time frame. I think yesterday yen was bearish. I think yen was bearish. Okay, yen was bearish. A few minutes, please. Let me send a message on the various social media platform. A few minutes. Okay, so as you can see, price is pulling back to a discount area. You can see that price is pulling back, is retracing to a discount area. It's currently at a discount area. So what I have on the chart, what I'm seeing on the chart now, JPY is likely going to change its direction any moment from now. Anytime soon, JPY is likely going to go bullish. Okay, so my bias on yen for today's market is bullish, but it's not confirmed yet. It's not confirmed yet. A bullish reversal pattern needs to form at this discount area for me to buy yen. So it's not confirmed yet. At the moment, the yen is still bearish. You need to wait for a bullish reversal pattern to form at a discount area before you buy. That's my take on yen. That's my take on yen. Okay, so yen is at a discount area, all you have to do is apply your Fibonacci from this swing low to this swing high. So we had this swing high, and this swing low. Price pulled back to a premium area, strong rejection. You can see the pattern we had here. We had what looks like an angry man, and the next candlestick closed bearish. Now price has pulled back to a discount area. So I think we have a fair value gap. Let's go down to 4 hour. You can see, okay, so you can see we have this fair value gap here. This is 4 hour time frame. You can see, but on 4 hour, you can see what we have here. This is a bullish reversal pattern on 4 hour time frame. We had a doji. We also had an inverted hammer, which indicates change in trend from bearish to bullish. Okay, so let's see what's happening in 1 hour time frame. Good. So best entry for Japanese yen, if you want to buy, you could wait for price to break out from this resistance before you buy, or let's see what's happening on the lower time frame. Let's see, probably a fair value gap was created after the formation of this pattern. We have a fair value gap here. You can see on this is 1 hour time frame. It's likely on 15 minutes a fair value gap was created here, and that is the reason for the retracement. Okay, so let's just confirm on 15 minutes. I'm sure there's a fair value gap that price just came to fill. Can you see that? So can you see that? Price came back to fill. That is the reason for the retracement on yen. Price came back to fill this fair value gap. So I'm going to buy yen if 1 hour candle closes above this fair value gap. I would buy yen. I'm not waiting for this breakout. Okay. I would buy yen. I will go bullish on yen if 1 hour candle closes above the high of this fair value gap. That is my take on. So what can you see on 15 minutes time frame? You can see on 15 minutes time frame we had a shift in market structure at this point. Liquidity that was residing at this low was swept. Liquidity residing at this low was swept. I think this was the low of yesterday. Yeah, this was the low of yesterday. So the first thing they did this morning was to sweep the liquidity. You can see that was the first thing they did this morning. Sweep the liquidity, and after sweeping the liquidity, we had a shift in market structure. This is an impulse move, and after a shift in market structure, price is expected to pull back to a discount area or pull back to fill a fair value gap that was created, and that is what has played out. So if a 1 hour candle closes bullish above this high, that would be the right time to buy yen. Okay, so I'm bullish on yen today. I'm bullish on yen. If there's any pair you want me to analyze, if you have any question, please drop it in the comment section. Good morning, Mr. Joseph. If you have any question, any pair you want me to analyze, please let me know in the comment section. My bias for DXY this week remains bullish. Today, I'm still bullish on DXY, and also on yen. I'm still very bullish. So yen is bullish, dollar is bullish. Simply means that USD/JPY is likely going to range. USD/JPY is likely going to be in a range today, since the US dollar is bullish and the yen also is bullish. Okay, so if you want to trade JPY pairs, you should consider trading other JPY pairs like Euro JPY, GBP JPY, CAD JPY. Okay, so that's my take on the yen. So let's look at currency pairs. Let's start with GBP USD. I want to believe you all can hear me. GBP USD. Okay, so like I said, my bias for the dollar is bullish, so I will be looking for sell opportunity on GBP USD. I will be looking for opportunity to sell GBP USD. GBP USD. Okay, so yesterday candle, as you can see, we had a bearish reversal pattern on the daily time frame. we had a spinning top, and yesterday candle also closed as a spinning top. And I think what they want to do is sweep liquidity or probably fill a fair value gap that was created after the formation of this pattern we had yesterday. And also on the daily time frame, we still have this fair value gap here. There's a fair value gap here that has not been filled completely. They might also want to fill this fair value gap, okay? So they might sweep the liquidity residing at this previous high. The high of yesterday is an area of liquidity. A lot of retail traders have executed sell, and their stop losses will be residing at this previous high. And I think that is what they are going for. I think that is what they are going for. There's a high probability they will sweep this liquidity before CPI data, before New York session, or after CPI data has been released. There's a high probability they are coming for these highs. Okay, so let's go down to 4 hour. Let's see what we had on 4 hour time frame after the close of yesterday. Okay, so you can see the pattern we had on 4 hour yesterday. We had a spinning top, we had an engulfing pattern. Can you see that? We had a spinning top, we had an engulfing pattern. And I think after the formation of this engulfing pattern, we had a fair value gap. A fair value gap was created there. That could also be the reason for this pullback. Let's confirm. Let's go down to 1 hour. Okay, so on 1 hour, we had the fair value gap. Okay, the fair value gap on 1 hour was at this point. Okay, let's go down to 15 minutes. There is a fair value gap the market wants to fill. So you can see what we had here on 15 minutes time frame. So you can see we had this fair value gap. You see this fair value gap? You see this fair value gap? So, okay, we had one here too. We had a very tiny fair value gap here too. That one has been filled at this point. The fair value gap here has been filled. So I think this is the only fair value gap that has not been filled. And I think price is okay. Price has already filled and it's trying to close below. So if I'm going to take any risk on GBP USD now to be a sell, that is if 1 hour candle closes below this area. Okay, if 1 hour candle closes below this zone, then I might consider going bearish. But like I said, I wouldn't want to trade the dollar pairs until CPI data is released. Okay, I didn't mean there was no major news for the dollar today. I would be selling GBP USD if 1 hour candle closes below this zone. But because of the CPI, I would have to, wait for CPI to be released before I take a trade on dollar pairs. I hope that is clear. So my bias is bearish. Okay, if you want to risk it, you can sell if 1 hour candle closes below this level. You can sell. Set your stop loss few pips above this level. Your stop loss should be at least maybe 10 or 15 pips or even 20 pips because of the major news that will be released later today. Okay, I might take this sell. I might take this sell. If 1 hour candle closes below this level, I might take the trade, but I'm not going to go all in. I'm not going to go all in. I'm just going to risk maybe 5%, 5% of my daily drawdown. I might just risk 5% or 10% of my daily drawdown on this first trade on GBP USD. Okay, so I'm waiting for 1 hour candle to close. If it closes below this area, I might take a sell. I might take a sell. All right, we'll look at gold in a few minutes. Okay, we'll look at gold in a few minutes. Okay, since the dollar is bullish, gold should be bearish. Since dollar is bullish, gold should be bearish. I think gold has been in a range. It's been ranging since the market opened, and that's because of the CPI data. That's why gold has been in a range. Okay, so that's my take on GBP USD. It's a sell for today's market. It's a sell. Euro USD also. Euro USD is positively correlated with GBP USD. Okay, so it's a sell also on Euro USD. It's a sell. Okay, it's a sell on Euro USD. Euro USD is likely going to come and fill this fair value gap. It might. Euro USD might come to fill this fair value gap. Okay, but it might not get here today. Okay, it might not get here today. This might take weeks. Okay, this is about 150 pips from the current, or 160 pips from the current market price. So this might take some days. Okay, it's a swing trade call. This is not scalping. This is not day trading. Would be swing. If you want to hold the trade to this area, to this level, that would be a swing trade, not day trading, not scalping. Okay, so first they will come for this low, which is an area of liquidity. This low, this is where they are coming to. This is where I see Euro USD getting to. Okay, let's see for our. Okay, so on 4 hour, my expectation on EU, I'd love to see price. You can see it created a fair value gap yesterday at this point. So I'd love to see price pull back to this area. Okay, this is where I'd love to sell. Okay, this high, this relative equal high might be used as liquidity. This relative equal high might be used as liquidity in New York session. Okay, it might be used as liquidity in New York session. If they don't sweep that liquidity, go down to 1 hour, a fair value gap has been created on 1 hour or 15 minutes time frame. So it's either they will push price back to fill the fair value gap that has been created on 1 hour or 15 minutes time frame, or they will sweep the liquidity. That is what is going to play out in New York session. That's what's going to play out in New York session. So they might want to come and retest this fair value gap, though it has been filled at this point. The know most retail traders would have executed sell after this fair value gap got filled at this point. The know most retail traders would have entered sell now. The impatient traders would have entered sell. Okay, they would have entered sell, and their stop losses will be residing at this high. You can see the pattern we had here. We had a shooting star candle, a bearish shooting star candle. So most retail traders will have executed sell, and their stop losses will be residing at this previous high. So there's a high probability they will go for the stop losses. They will go for the stop losses before pushing price down. Okay, so that's my take on Euro USD. That's my take on Euro USD. If there's any pair you want me to analyze, please let me know in the comment section. So let's look at gold. Gold. So my take on gold is bearish for today's market. My take on gold for today's market is bearish. Let's start with the daily time frame. Okay, so as you can see, yesterday was strongly bearish on gold. Strongly bearish on gold. This was the opening for gold, and this was the closing. Strongly bearish. With this pattern, you should expect gold to sell. With this strong engulfing pattern, you should expect gold to sell. You should expect gold to sell. Okay, so yesterday, gold did over how many pips? 3343.3. 33. That's about close to, that's about 500 and 400 and something pips. 400 and something pips. Gold did over 400 pips yesterday. Okay, so what's been happening today? So we have, if you apply your Fibonacci, let's start from this previous range. If you apply your Fibonacci from this previous range, okay, so this is your swing high, this is your swing low. Price has pulled back to what? A premium area. Can you see that? Price pulled back to a premium area. You can see, and at that premium area, a bearish reversal pattern formed for us to take a sell. Okay, and if we are to work with the most recent range, this will be the most recent range, which is from this swing low to this swing high. Price is at premium, so we need to wait for price to pull back to a discount area, and at the discount area, we have this fair value gap. This is where I think gold would get to. Okay, it's going to sell now. If you go down to lower time frame, let's go down to 4 hour to identify the fair value gaps on 4 hour time frame. So gold is likely going to fill those fair value gaps at a discount area before going bullish. So you can see we have this fair value gap here, and we have this mitigation block. You can see we have this mitigation block, and we have this fair value gap. So there's a high probability gold is coming to fill this gap. Okay, there's a high probability that gold is coming to fill this gap. Okay, so this is where you should look for buys if you want to buy gold. This is where you should look for buys. This is a discount area. You don't buy at a premium area. Buying at a premium area is at a very high risk. So you should wait for price to pull back to a discount area before you go bullish. So my bias for gold for today's market is bearish. I am bearish on gold. I am bearish on gold. Is there another pair you want me to analyze? Let me know. Let me know. Is there any other pair you want me to analyze? So we've looked at Euro USD, GBP USD, and gold. Okay, so let's look at GBP JPY. I'm interested in selling GBP JPY today. I've been waiting for my setup on GBP JPY. Let me see what's happening on GBP JPY. Okay, there is no major news for Great Britain. There's also no major news for the yen. Okay, so you can see what we have here. Great Britain pounds JPY is giving us a sell opportunity. This is a sell opportunity. I'm going to hop into this trade in few minutes. Well, let's start with the daily. Let's start with the daily. Let's start with the daily. I can't afford to miss this trade on GJ. I've been waiting for this move since the market opened yesterday. I've been waiting for this move. Okay, so what's playing out on GJ? So we had this high. Liquidity has been swept. Okay, we had this high at this point, and okay, let me go back here. Let's see. At this point, let's see. Okay, I think the liquidity also residing at this previous high has been swept. I think. Right? Yeah, I think it has swept that liquidity. I think it has swept that liquidity. Okay, so let's go down to 4 hour. Let's go down to 4 hour. You can't buy GBP JPY from the current market price. You cannot buy. This would have been the best time to buy GBP JPY. If you're trading with the daily time frame, you had an inverted hammer here. This is a bearish inverted hammer, and the instruction is that when an inverted hammer forms like this, if it is bearish, you wait for the next candle to close bullish before you buy. So your entry on GJ should have been at this point. So if you didn't buy from this point, now if you're trading with 4 hour, you would have even catch the trend at its early phase. If you were trading 4 hour, if you looked at 4 hour, let's go down to 4 hour, you would have joined the trend at its early phase. So buying, okay, so you can see what we had here on 4 hour. We had hammer here, we had hammer here, we had a doji here, then we had this bullish candle which engulfed this pattern. So this would have been a good entry on 4 hour time frame. This would have been a good entry on 4 hour time frame. Now, if you had missed buying GJ from this point, you missed buying it. You had this was a second opportunity, this retracement. You could have bought from this point. If you had missed this first opportunity, you would have bought from this point. So if you didn't buy from this point, you had the first opportunity, second opportunity. I always say the third opportunity is not a good area to say. You had third opportunity here and another opportunity here, but first and second opportunity is the best opportunity. So if you had missed the first and second, then I don't see any reason you should be buying from the current market price. I see no reason you should be buying. Even if GBP/JPY will do 1,000 pips from the current market price to the upside, you shouldn't take the trade. Before you buy, you should wait for price to retrace. Wait for a retracement. Look for your buy setup after the retracement. Okay, you cannot buy from the current market price. So let's see what's happening on 1 hour. I think on 1 hour we should be able to identify a bearish reversal pattern on 1 hour time frame. There should be a bearish reversal pattern on 1 hour time frame or 15 minutes time frame. Okay. So current 1 hour is bearish. Let's see 15 minutes. There should be a bearish reversal pattern on 15 minutes time frame. Okay, so you can see what we have on 15 minutes time frame. 15 minutes time frame is set. This is a bearish reversal pattern. We had a expanding top, and the next candle closed bearish. Now, before we take a trade here, we need to ensure that there's a shifting market structure on lower time frame. So let's see 5 minutes. You can see 5 minutes is also set for sell. 5 minutes is set for sell. This is a bearish reversal pattern. Okay, but we need to ensure there's a shift in market structure Do we have a shift in market structure on 1 minute? If there's no shift in market structure on 1 minute, then the setup is not clear yet. Okay, it's not set. Okay, so do we have a shift in market structure? Yeah, so we had a shift in market structure. We had this mitigation. Price was mitigated at this point. Okay, so price was mitigated at this point. We had a breaker. Liquidity reside at this high was cleared from this point. So we had this high. So shifting market structure has occurred at this point. Okay, has occurred at this point. This is 1 minute time frame. So one can look for sell from this. If price pulls back to fill this fair value gap, one can look for sales there. This would be a very good area to consider selling. Okay, this would be a very good area to consider selling. I'm taking this trade on so if I take a sell from this point 199.71, my stop loss will be 20 pips above this high. 20 pips above this high, that should be 200.17. That is where I'm going to set my stop loss. Okay, if you agree with my analysis, you can take the trade on GBP JPY. You can take the trade on GBP JPY if you agree. Now, I'm not going all in. Like I said, this would be the best area. This point of interest will be the best area to sell. So on this first trade, I'm just going to risk 30% of my daily drawdown. Okay, I'm not going all in. If you're not trading with lot size above 0.01, you should wait for price to pull back to this area. If you're not trading with lot size that is above 0.01, wait for price to pull back. This will be a best entry for you. But if you are trading above 0.01 lot size, you can go in. Let's say you are trading with 0.03 lot size, you can go in with 0.01 from the current market price. If price pulls back into this zone, you go in with what? 0.02 lot size. Okay, because that price will pull back to this zone is not guaranteed. Is not guaranteed. Price might just keep dropping from the current market price. So if you don't want to miss the move, you go in with small risk. If price pulls back to this your point of interest, fine. If price does not pull back to that point of interest, you wouldn't make much, but at least you know that you took advantage of the move. It's better to be in the market than you not taking advantage of the move. It's hot when you know the trend of the market and you didn't even make money on that move. You're just watching the market move in that direction. That's why it's good you have good capital that would afford you to trade above 0.01 lot size. You should be able to execute it with at least 0.02 lot size. Okay, so that's my take on GBP JPY. I'm taking a sell now on GBP JPY. Any question? Please, if you are yet to give the video a thumbs up, please give it a thumbs up. And if it's your first time joining the live stream, please subscribe to the channel so that anytime I come on live, you get notified by YouTube. Give the video a thumbs up and do subscribe so that anytime I come on live, you get notified on YouTube. I do come on live on Tuesday, Wednesday, and Thursday, 10 a.m. And these 3 days, I give calls, I give signals, at least two signals, okay? So any question? Is there any other pair you want me to analyze? Let me know in the comment section. Is there any question? If you are my student, if you're in the fraternity, or you just bought my course on the ultimate guide in Forex trading and you are in this class, drop a comment. Drop a comment if you're in this class. Drop a comment for me to know that you are participating in this class. Okay, for those who are not in this class, they will give reasons why they didn't show up for the class later. They will give reasons. So if you're in this class, you are my student, drop a comment. I want to be sure that you are in this class, you are present. I'm taking attendance of those students who miss class. Taking attendance, okay? Any question, any question, any question? And if you've not gotten my course, The Ultimate Guide in Forex Trading, get it today for just 5,000 naira. By next week, the price will go up to 10,000 naira. I'm increasing the price next week to 10,000 naira. So if you have not gotten it, you have the opportunity to get it between now and next week for just 5,000 naira, $3. Okay, you can find the link in the description space. You can find the link. If you have my WhatsApp number, you can send me a message on WhatsApp to get the link. Any question, any question, any question? Please, if you want to trade US dollar pairs, I would advise you wait for CPI data to be released by 1:30 p.m. Nigerian time. It's 10:37. In the next 3 hours, I think, yeah, that news will be released. So be patient. So since there are no questions, I think that will be all for today's session. I appreciate every one of you for your participation, and I wish you all a profitable trading day. Bye for now.